Welcome back to the deep dive. You know how this works. You bring us the source material that's got you thinking, and we unpack it together, trying to find those hidden gems of insight.
Always a fascinating journey.
Today, it's all about cycles.
Hmm.
Have you ever stopped to think about just how much cycles impact, well, pretty much every aspect of our lives?
It really is incredible, isn't it?
I mean, you see them everywhere, from the rhythm of the stock market to the migration of birds. There's this underlying pulse, this ebb and flow to, well, everything, really.
It's true.
And you sent us a really interesting document that dives deep into this whole world of cycles. So we're excited to break it down with you and see what we can uncover.
Yeah, cycles are definitely everywhere, often working behind the scenes.
Right.
The source actually starts off by grounding us with some pretty relatable examples, right here on Earth. Like, take the cycle of day and night.
Of course, yeah.
That's just Earth's rotation around.
Simple but fundamental.
Then you've got the tides, governed by the moon's gravitational pull.
And how about those seasons? I mean, that yearly cycle dictates everything when we plant our gardens. The incredible journeys birds make across continents.
Exactly.
It's mind-blowing when you think about it.
And what's fascinating about these natural cycles, is that once you understand them, you can anticipate things, you can plan accordingly.
Like gardeners knowing the best time to plant and harvest. It's like having a sneak peek into the future.
Sort of, yeah.
But get this, the source goes even further and suggests that cycles might extend far beyond our planet.
Oh, really?
Yeah, they mention research that suggests the rise and fall of entire species here on Earth could be linked to our solar system's movement through the Milky Way galaxy.
Wow. That's a cycle on an epic scale.
Truly mind-boggling.
Yeah.
But let's bring it back down to Earth for a moment and shift our focus to the financial markets.
Okay.
Because just like the natural world, markets have their own rhythms, their own cyclical patterns, and that's where this source material really gets into the nitty-gritty.
Yeah, it does.
So for all you market watchers out there, this is where things start to get interesting. The document introduces us to, well, legends, really, W.D. Gann and J.M. Hurst.
Pioneers.
True pioneers in applying psychoanalysis to the stock market. And Gann, with his, I don't know, almost mystical approach, always adds a touch of intrigue.
Oh, absolutely. He was a fascinating figure, that's for sure.
And then we have Hurst, whose book, The Profit Magic of Stock Transaction Timing, is still, well, it's considered a classic.
It is.
What's really interesting is there's even a study from MIT that actually supports the idea that recognizing patterns, these cyclical patterns, can give you a real edge in the investment game. Apparently, the MIT researchers found that even basic pattern recognition could actually outperform those fancy algorithms in some cases.
Interesting.
So it sounds like there's real value in understanding these cycles, even if you're not a math whiz. But the source does point out that psychoanalysis is, well, it's not exactly a walk in the park. There's definitely a level of complexity involved. Why is that?
Well, there are a few reasons why psychoanalysis can be a bit tricky. For one, there's often this communication gap between the world of researchers and the world of traders.
A language barrier, huh?
Yeah, kind of.
So what you're saying is the highly technical language researchers use can be, well, pretty tough for traders to grasp.
Right. It's like they're speaking different dialects.
Okay, we need a translator then.
Huh. That's a good way to put it. And then there's this fundamental difference between technical analysis, which is often very visual, and psychoanalysis, which delves more into the numbers.
Right, right.
Traders are looking for those patterns on charts, those squiggly lines that tell a story.
And psychoanalysis focuses more on the underlying mathematical rhythms.
Exactly. It's almost like, the difference between appreciating a painting for its visual beauty and understanding the artist's brushstrokes and techniques.
Both perspectives offer valuable insights, but they require different approaches.
Exactly. And then there's the contrasting mindset between forecasters and traders. Forecasters are all about predicting the future, aiming for that perfect prediction.
Right.
But traders, they often think in terms of probabilities, managing their money and planning their exit strategies based on a range of factors, not just a single forecast.
So it's not just about knowing what's going to happen. It's about knowing how to react and manage risk in any scenario.
Right.
But with all this complexity, where do we even begin to make sense of cycles, especially in the world of finance? I mean, how do we even approach it?
Well, the source actually offers a pretty helpful framework for psychoanalysis. They pose 3 key questions that any approach needs to answer. And they illustrate it using a great example, Hamburg's weather data.
Okay, I like where this is going. Break it down for us. Question number 1.
All right, so the first question is, what are the active cycles? Basically, we need to figure out which cycles have the most significant influence on the data we're looking at.
Makes sense.
In the Hamburg weather example, we can pinpoint that dominant cycle by its amplitude, which is basically like the height of the cycle's wave.
Yeah.
It's like identifying the tallest roller coaster in the park.
The one with the most dramatic ups and downs. I get it. So we've spotted the big kahuna. What's next?
Question number 2. How long is that active cycle? This involves figuring out the length of that dominant cycle. So in the Hamburg case, it turns out to be that seasonal cycle of 359 days.
Makes sense. We all know a year is one full cycle of seasons.
Right?
Okay, so we've got the what and the how long. What's the final piece of the puzzle?
The last, and maybe the most important question is, where are we in the cycle? This is crucial for understanding the current phase of the cycle. Are we approaching a peak, like the height of summer? Or are we heading toward a trough, like the depths of winter?
So it's not just about knowing that the cycle exists, but it's about knowing where we stand within it.
Right.
And how does this framework translate to, to analyzing financial data? Is it really as simple as looking at the weather?
It's the same basic principle. We can apply the same framework to markets as well. For instance, think about sentiment cycles. Those reflect the mood of investors. We can track these cycles using indicators like the VIX, which is often called, the fear index.
The VIX, yeah, that's a popular one.
Ah,
It's like a barometer for investor anxiety, especially in turbulent times.
exactly.
Hmm.
And the source gives a fascinating example using both the VIX and the S&P 500 data from early 2020. This is where things get really, really interesting.
Okay, I'm all ears. Tell me more.
So the analysis was done, get this, before the COVID-19 crash.
No way.
And it pointed towards a potential market downturn. It's like the cycles were whispering a warning, even though there were no obvious signs of trouble on the surface.
Hold on, are you saying this analysis could have predicted the COVID crash?
Well, it wasn't a perfect crystal ball, but it did suggest a high probability of a downturn. And that's where cyclical synchronicity comes in.
Okay.
Think about it this way. You wouldn't buy a stock based on one analyst's opinion, right?
Right, you'd want confirmation, multiple sources.
Exactly. So finding similar cycles in related markets can increase our confidence in the analysis.
Like getting a second opinion from a trusted advisor, or in this case, multiple advisors.
Exactly. So, if you see similar cycles in the VIX and the S&P 500, and maybe even gold prices, it strengthens the case for a potential, market shift. But, and this is key, cycles aren't static. They're always breathing, evolving.
Right, it's like that heartbeat analogy we talked about.
It's averaging.
Perfectly consistent even when things are, stable.
Yeah.
So how do we account for this constant change when we're analyzing and, trying to predict market moves?
That's where understanding cycle breadth becomes super important. And we have to acknowledge that, that cycle lengths and amplitudes, they can expand and contract over time. Imagine those ocean waves. Sometimes they're crashing powerfully on the shore. Sometimes they're gently lapping at the sand.
It's the same energy, but the expression of that energy changes.
Yeah.
So it's like surfers adjusting their technique based on the waves.
Yes.
Traders need to adapt to the shifting dynamics of those cycles. It's not about just blindly following historical patterns, but it's about recognizing the underlying rhythm, but being flexible, responsive to the ever-changing market conditions.
Exactly. And there's another crucial point. It's like, cycles don't exist in a vacuum.
Right.
They can be influenced by external factors, just like a sudden gust of wind can disrupt those ocean waves we were talking about. Unexpected events, things like economic shocks or big political shifts can definitely throw a wrench in the works and impact those market cycles.
So we can't just analyze cycles in isolation. We need to be aware of that bigger picture. Consider how external forces might be influencing things.
Absolutely.
But before we get ahead of ourselves, should we take a break and pick this up in part 2? We've covered a lot of ground already.
I'm happy to keep going if you are.
All right, lead the way.
All right, so let's talk about this Hurst nominal cycle model. It identifies 11 key cycles observed in the stock market, These cycles range from those short-term ones lasting just a few days to longer-term cycles that can stretch over years, even decades.
Like those nominal cycles, like the 20-week cycle, that's a popular one with traders.
It is. But the key takeaway here is that these cycles aren't fixed or, rigid. They have that breadth to them, always shifting, evolving.
Right.
And that's what makes cycle analysis so challenging, but also so fascinating.
Yeah, I can see that.
It's not about finding some some magic formula that, predicts the future with absolute certainty. That's just not realistic.
No, I guess not.
It's more about understanding the probabilities, recognizing the patterns, and being able to adapt to the ever-changing dynamics of the market.
Kind of like navigating by the stars instead of relying on a GPS.
Mm-hmm.
You need to be able to read the signs, make adjustments along the way, be prepared for the unexpected.
That's a great analogy.
Hmm.
Speaking of practical applications, let's revisit that concept of cyclical synchronicity. We touched on it last time.
Right.
Remember, it's all about finding those confirming signals, those similar cycles in related markets.
Ah, yeah, cyclical synchronicity. It's like having a trusted friend back up your gut feeling.
Yeah.
Giving you that extra confidence in your analysis.
Exactly. The more evidence we can gather from different sources, the stronger our analysis becomes.
Yeah.
So let's say you're looking at the stock market and your analysis is pointing towards a potential downturn on the horizon.
Okay, so we have our initial hypothesis. What's next?
Well, now we're going to look for confirming evidence in other related markets. So we might analyze the bond market and see if a similar cycle is emerging, suggesting that that investors are getting a bit more cautious.
Okay, that's one piece of the puzzle. What else could we examine?
We could also look at commodity prices, especially gold, which is often considered like a safe haven asset.
Oh, right.
So if gold prices are on the rise and we see that happening alongside similar cycles in the stock and bond markets, it just strengthens our case even further for potential market correction.
Like those crime dramas, where the detectives are piecing together clues from different sources.
Yeah, exactly.
Each clue on its own might not be conclusive, but when you put them all together, this clearer picture starts to emerge.
Exactly. That's the real power of cyclical synchronicity,
Yeah.
connecting the dots, seeing that bigger picture, making more more informed decisions based on that convergence of evidence.
But even with, all these tools and techniques, it seems like understanding these cycles and how they all interact can be pretty complex. I mean, it's not something you just learn overnight, right?
No, it does require, some dedication, a willingness to dive into those nuances of cycle analysis. But the source material you've provided is a great starting point for anyone who's interested in learning more. And remember, one of the key takeaways from last time, these cycles are constantly changing.
Right.
They're not these static, predictable patterns that repeat perfectly.
Yeah.
There's always that breath to them.
Right, the heartbeat analogy.
It's the
Yeah.
tax.
It's
Yeah.
never a perfectly consistent rhythm, even when everything's fine.
Right?
So how do we factor that in when we're analyzing cycles and trying to make predictions?
That's where understanding cycle breadth comes in,
Okay.
We need to be aware that, cycle lengths and amplitudes can expand and contract.
Right.
Just like those ocean waves. Sometimes they're massive and powerful. Other times they're, gentle and rolling. It's the same energy, but the expression of that energy changes.
So it's like those surfers, again, adjusting their approach based on the conditions.
Yes.
Traders, investors need to be adaptable, recognizing that cycles are dynamic, and responding to those shifts rather than trying to force a rigid historical pattern onto the current market.
Absolutely. And it's also important to remember that, that cycles are influenced by things happening outside the market.
Yeah.
Just as a gust of wind can change the pattern of, ocean waves, those unexpected events can disrupt market cycles. Think about things like economic shocks or geopolitical turmoil. They can definitely throw a curveball and impact those cyclical patterns.
That makes perfect sense. So we can't just analyze these cycles in isolation. We need to be aware of that broader context and how those external forces might be at play.
For sure.
But speaking of potential pitfalls, you mentioned earlier that traditional cycle models often make this key assumption that doesn't always hold true in the real world. What were you referring to?
Yes, you're referring to the assumption of symmetry in cycles.
Oh.
Many traditional models they assume that the upswing of a cycle will perfectly mirror the downswing in terms of duration and intensity.
Right, but as we discussed, the real world often throws us a curveball, especially when it comes to things like economic cycles.
Yeah.
Recessions can be sharp and brutal, while recoveries can be slow and drawn out. There's often this distinct asymmetry to those cycles.
Exactly, and that's why it's crucial to be aware of the limitations of those those traditional models, we need to consider, making adjustments, like incorporating that skew factor we talked about to account for that asymmetry that often exists in real world cycles.
So it's like realizing that, that our maps, while helpful, might not perfectly reflect the terrain we're navigating. We need to be prepared to make adjustments based on the actual conditions we encounter, not just blindly follow a predetermined route.
That's a great way to put it.
Hmm.
And speaking of making adjustments, let's revisit that cycle scanner framework.
Okay. Yeah.
We explored it in part 1.
Right.
Remember all those steps we covered?
Let me see if I can recall them all. We talked about detrending, cycle detection, validation, ranking, spectral averaging, and endpoint flattening. Whew. That's quite a mouthful.
It is a multifaceted approach, but each step plays a crucial role in helping us, identify and analyze those cycles. The key thing to remember is that this framework is a starting point. It gives you that solid foundation, but the real skill comes in applying that knowledge, interpreting the results, and adapting your approach based on, the specific context you're dealing with.
It's like learning the rules of a game.
Yeah.
You need to understand those basics before you can develop your own winning strategy.
Exactly. Think of a chess player. They have to consider multiple moves in advance. Think about how their opponent might react.
Right.
Similarly, a savvy trader or investor who understands, cycles needs to consider the interplay of different cycles, the potential impact of external events, the limitations of the models they're using.
So it's about thinking in terms of probabilities, not certainties.
Right.
Recognizing patterns, but being prepared for those unexpected twists and turns that the market can throw our way.
Yeah.
But we've been talking a lot about, applying cycle analysis to trading and investing. Does the source mention any other ways that this knowledge can be used?
Absolutely. The principles of cycle analysis can actually be applied to a wide range of fields, from economics and business to social trends, even personal development.
So you're saying it's not just about, making money in the stock market.
No, not at all.
There's a broader relevance to understanding these cycles.
For sure. For instance, economists use cycle analysis to study business cycles.
Oh, okay.
Trying to make sense of those economic booms and busts and to forecast, future economic growth.
It's like having a glimpse into the future of the economy, even if that glimpse is always a bit blurry around the edges.
That's a great way to put it. And, and businesses use cycle analysis to anticipate trends in consumer behavior.
Oh.
Optimize their marketing efforts and make smarter decisions about, inventory and production.
So it's about being in tune with, the rhythms of the market, anticipating what consumers want and when they want it.
Yeah.
That's a pretty valuable insight for any business.
Yeah.
But what about on a more personal level? Can understanding cycles help us, make better decisions in our own lives?
Absolutely. We all experience, cycles in our energy levels, in our moods, even in our productivity.
Oh, that's true.
Think about those days when you wake up feeling on top of the world, ready to, to conquer anything, versus those days when you can barely get out of bed.
Right.
Those are cycles too.
That's so true.
Okay.
I never really thought about it that way.
Yeah.
So by becoming more aware of those personal cycles,
yeah,
we can learn to work with them rather than against them.
Precisely.
Okay.
We can optimize our schedules, make choices that align with our natural rhythms, even anticipate those periods of high energy and low energy. It's about becoming the conductor of our own personal orchestra, harmonizing those different cycles to create a more fulfilling life.
What a beautiful analogy.
Yeah.
So this deep dive into cycles has really been about so much more than just, market analysis. It's about recognizing those hidden rhythms that shape our world.
Right.
Understanding their influence and learning to navigate them with greater awareness and skill.
Absolutely.
But before we wrap up part 2, let's recap some of the key takeaways we've covered so far.
Okay, sure. So we started by highlighting the dynamic nature of cycles and the importance of seeking confirmation through, cyclical synchronicity.
Right.
Then we explored the limitations of traditional models and the need to, to adapt and account for the asymmetry that we often see in those real world cycles.
Right.
And we revisited that cycle scanner framework, breaking down the steps involved in identifying and analyzing those cyclical patterns.
Right. And I think it's important to remember that cycle analysis isn't, it's not some magical solution.
Hmm.
It's a tool, a lens through which we can view the world and potentially, make more informed decisions.
Right.
But it's up to each of us to apply this knowledge wisely.
Absolutely.
Consider that broader context and be prepared to adapt as circumstances change.
Exactly. And in part 3, we'll explore some specific strategies and real world examples of, how you can actually put this cycle knowledge to work in various areas of your life.
Oh, good, right.
From, trading and investing to understanding those larger economic trends and even making more informed choices in your day-to-day life.
I'm really looking forward to uncovering even more insights in part 3. This has been a fascinating journey so far, and I'm excited to see where it leads us next. Welcome back to the Deep Dive. We're on the final leg of our exploration into the fascinating world of cycles, and I'm really excited to see where this takes us.
Me too.
In part 1, we established that cycles are basically woven into the very fabric of our world, influencing everything from the rhythms of nature to, well, the ebb and flow of the financial markets. Right?
Absolutely.
And then in part 2, we took a closer look at the intricacies of cycle analysis, recognizing that these cycles are constantly evolving, often influenced by those external forces.
Right.
We also talked about the importance of considering multiple cycles, kind of like getting those confirming signals to gain a more comprehensive understanding.
Like those multiple perspectives we talked about.
Exactly. And how can we forget about that handy cycle scanner framework? The one that helps us break down the analysis into those manageable steps.
Right. Detrending, cycle detection, all that good stuff.
It's like we've been training to become cycle detectives.
Yeah.
I like that.
So now, in part 3, we're putting on our detective hats and diving into the practical applications of a cycle analysis.
The real world stuff.
Exactly. We'll explore specific strategies, real-world examples of how this understanding of cycles can be your secret weapon for making smarter decisions in all sorts of, aspects of your life.
It's true. It's not just theory.
So let's shift gears from theory to practice.
Okay.
How can we actually use this knowledge of cycles to, to navigate the markets, to anticipate trends, and maybe even gain that competitive edge? Well, one of the most popular applications of cycle analysis is in trading and investing.
So.
Traders who understand cycles can use this knowledge to identify potential entry and exit points, manage risk effectively, and even anticipate those market reversals that catch so many people off guard.
It's like having a sixth sense, a way to see through all the noise and anticipate the market's next move.
Yeah.
But how exactly does that work in practice? Can you give us some specific examples?
Sure. Imagine a trader who's following that 20-week cycle.
Okay.
Which, as we mentioned before, is one of those, key cycles identified by J.M. Hurst.
Right.
So let's say the market has been in this strong uptrend.
Okay.
But the 20-week cycle is, it's nearing its peak.
So the market's looking healthy on the surface, but the cycle analysis is hinting at a possible change in direction.
Exactly.
What would a trader who understands cycles do in this situation?
Well, they might start to become a bit more cautious. They wouldn't necessarily panic and sell everything.
Right.
But they might start to reduce their risk.
Right.
By taking some profits off the table or tightening their stop loss orders.
Okay.
Essentially, they'd be using that cycle analysis as a guide to prepare for a potential shift in momentum.
So it's about incorporating cycle analysis into a broader strategy.
Right.
Using it as a tool to anticipate those crucial turning points and adjust accordingly.
Exactly. And it's important to remember that that cycles are just they're just one piece of the puzzle.
Yeah.
They work best in conjunction with with other technical indicators and good old fashioned fundamental analysis.
Right.
A savvy trader considers all those factors from price patterns and trading volume to economic data and those unexpected news events that can shake things up.
It's like a chef using a variety of ingredients and techniques to create a delicious dish.
I like that.
Cycles are just one element in that recipe for, for successful trading.
For sure.
But speaking of recipes, that cycle scanner framework we explored, the one with all those steps, can be a really valuable tool for traders and investors who are ready to start incorporating cycle analysis into their decision-making process.
Absolutely. It might seem a bit daunting at first,
Right.
but with practice, it becomes more intuitive.
Hmm.
The more you work with cycles, the more you start to see those patterns, understand those subtle nuances.
Right.
You start to see those connections between different cycles and how they influence market behavior.
It's like learning a new language.
Yeah.
It can feel overwhelming at first,
Yeah.
but with consistent effort, you start to understand the grammar, the vocabulary, and the beauty of how it all comes together.
Exactly. And just as fluency in a new language opens up these new worlds of communication and understanding, fluency in the language of cycles can unlock new insights into the markets and the world around us.
We've been focusing primarily on trading and investing, but
Mm.
but you hinted earlier that cycle analysis has broader applications.
Oh, absolutely.
Can you elaborate on that a bit?
Sure. The principles of cycle analysis can be applied to a wide range of fields, not just the financial markets.
Okay.
Think about, economics, business, social trends, even personal development. And, cycles they're everywhere, influencing how things unfold.
So it's not just about making money. It's about understanding those underlying rhythms that drive so much of what we experience.
Exactly.
Okay.
Economists use cycle analysis to study those economic booms and busts, those fluctuations that impact our lives in so many ways.
Right.
They use it to try to predict what's coming next, even though future always holds some surprises.
Like having that glimpse into the future of the economy, even if that glimpse is always a bit blurry around the edges.
That's a great way to put it.
But what about businesses?
Mm.
How can they benefit from understanding these cycles?
Businesses use cycle analysis to understand and anticipate consumer behavior. They use it to make better decisions about their marketing campaigns, their inventory management, their production cycles.
So it's like having a secret weapon for knowing what consumers want and when they're most likely to buy it.
Yeah, sort of.
That's pretty valuable insight for any business. But what about on a more personal level?
Yeah.
Can understanding cycles actually help us make better decisions in our own lives?
Absolutely. We all experience, those cycles in our energy levels, in our moods, even our productivity.
Oh yeah.
Think about those days when you wake up feeling, on top of the world, ready to tackle any challenge, versus those days when you can barely drag yourself out of bed.
Right.
Those are cycles too.
Wow, I never really thought about it that way.
Yeah.
So by becoming more aware of these personal cycles, we can actually learn to work with them rather than against them.
Exactly. We can start to optimize our schedules, make choices that align with our natural rhythms.
Mhm.
We can anticipate those periods of, high energy and low energy and plan accordingly.
Okay.
It's about becoming the conductor of our own personal orchestra, harmonizing those different cycles to create a more fulfilling and productive life.
That's such a powerful image.
It is, isn't it?
And it really speaks to what this whole deep dive into cycles has been about. It's not just about understanding those abstract concepts. It's about applying that knowledge to make better decisions in all areas of our lives.
Couldn't said it better myself.
It's been a truly fascinating journey, and I think we've only just scratched the surface of this vast and intriguing topic.
Oh, for sure.
But before we wrap up, what are some key takeaways you'd like our listeners to remember?
Well, I think the most important takeaway is this. Cycles are everywhere.
They are, yeah.
And understanding them can give you a real advantage, whether you're, navigating those markets, making business decisions, or even just trying to live a more fulfilling life.
Right. Those cycles they're those hidden threads that connect those seemingly unrelated events,
Yes.
revealing that underlying order,
Yeah.
beneath all the chaos. And while psychoanalysis might seem a bit, bit intimidating at first, we've explored some practical frameworks, real-world examples that hopefully demystify the process a bit.
It's true. It's not as complicated as it might seem.
It's a journey of discovery, a process of, continuously learning, observing, and adapting.
It really is.
The more we understand cycles, the better equipped we'll be to navigate the complexities of our world and make more informed decisions.
Absolutely.
So keep exploring, keep asking questions, and keep diving deep.
That's what it's all about.